So how did I do investing this year? The conventional wisdom is that you should just invest in the S&P 500 because it's very hard to consistently outperform the index, even for professionals. And that's advice for most people is pretty good. But if you enjoy investing in individual stocks and you think you have some sort of skill with that, then why not try? So this year I did pretty well. The beginning of the year I was actually down a little versus the index, but I ended up. So the index returned 17.88% if I had invested in that, but in my main account it's 29.11%. I actually did better in my two smaller accounts that I have, but we're just going to look at the main account. And a few of my medium positions like PayPal, Coupang, and Nintendo actually came down in December quite a bit, but even with that, I still managed to outperform the index here. And what about 3-year and 5-year? So I outperformed over a 3-year period. And what about 5 years? Over a 5-year period, had I just kept the money in the S&P 500, it would have gotten me a 96% return, but I got a 147.95% return in my main account by investing in individual stocks that I like. So I do enjoy it, and if I didn't, I wouldn't do it. But I think if I can get a performance over time that outperforms the S&P 500, then for me it's worth the effort, because since I'm retired now, I need the money to last me the rest of my life. And if I am only matching the S&P 500 or underperforming, I might need to work longer to be able to make that money last a lifetime. But if I can consistently outperform the S&P 500, then the amount of money I need is less, and it will lessen the chance that I'll have to return to work. So this has been a good year, and hopefully it'll be better. Since I'm semi-retired, I don't work a 9 to 5 anymore, but I do a little consulting on the side and do YouTube videos. Hopefully I'll have much more time to research individual stocks and keep up the outperformance. So this year was especially good. If you can outperform the S&P 500 index by over 10%, I feel like that's Warren Buffett territory. And this isn't a solicitation. I don't manage money for anyone. And whenever I do these videos and I talk about individual stocks, I'm just talking about my process, not recommendations to buy or sell. You should have the investing style that works for you. Some people like growth at a reasonable profit. Some people like buy and hold. Some people like active trading. And this is the style that works for me, which is just turning over as many rocks as possible and finding a lot of things that nobody's ever heard about, like crack and robotics or tailored devices, and focusing on the long term. So I'm not concerned what's going on quarter to quarter, but I feel like if I'm looking at things that won't pay off for 1 or 2 years or sometimes longer, hedge funds aren't looking at that, because if they underperform for 2 years, they'll be fired. So I have more time to let my ideas play out. And I do think a lot of the skill is not mathematical, but emotional. So Peter Lynch said if you can add 8 and 8 and come up with a number that's pretty close to 16, you have enough math skill to be a good investor. But what's more important is the stomach, your emotional stability. And I do think that's correct. And I got a lot of good things out of reading books like Fearless Golf, and what I learned from Losing $1 Million, which are sort of on the mental side, not the mathematical side. So I'll try to keep putting out these videos. If you want to support the channel, there's a Buy Me a Coffee link, but don't feel like you have to. 2025 was a great year. I left my job. I'm going to be a dad soon. So lots of positive things going on, and the market was helpful. So normally the market goes up about 10% on average, so it was an above average year for the S&P 500 and even better for me. And part of my reason for investing on individual stocks, even though the market is up a lot, is that the market is up a lot. So generally S&P 500 trades at about a PE of 15, and now it's about 30. So it's very pricey, and I've been waiting for a correction and it hasn't happened. But in the meantime, I've still been finding value using traditional Ben Graham type investing, and I'll continue to do so. While everyone is looking at companies like Nvidia, I don't invest in companies like that. I invest in companies like St. Joe or Crocs that is trading at 6 times free cash flow. But that's what works for me, and you just do whatever works for you. So let me know what you guys think in the comments, and Happy New Year, everyone.